Hello everyone, Adam Livingston here, the Bitcoin Wizard broadcasting for Swan Bitcoin. Before we jump in, a quick disclosure for everyone listening. Swan Bitcoin is currently providing Treasury management services to Sequans. Swan does not have any commercial relationship with Empory Digital Mobility. EMPD is only included as an additional real-world illustration. So we're going to be going through a purely educational walkthrough. We're going to examine how Bitcoin Treasury companies can trade at share prices that are less than the per share value of the Bitcoin that they hold. Nothing you hear today should be considered investment advice, a recommendation, or a forecast. Future outcomes are uncertain and all numbers are snapshots that are tied to the timestamps that are shown on the slides. So here's the roadmap. We're going to define the terms. We're going to define net asset value and the multiple of the net asset value, and why a reading of under 1 M-NAV indicates the equity's market price is below the value of the underlying Bitcoin. I'm going to show you the template, the exact inputs that we use, the Bitcoin held, the spot price, the fully diluted share count, the cash, the debt, and the formulas that convert those inputs into net asset value. And then we're going to apply the math to two fresh case studies, one being Sequans, where Swan is engaged, then EMPD. Both snapshots illustrate how share price can diverge from the underlying Bitcoin value and how that gap can change as market conditions evolve. By the end of this, you'll have a clean apples-to-apples framework that you can apply to any Bitcoin Treasury equity, confirm the inputs, run the same formulas, and see exactly how the market is pricing each company's Bitcoin on a per-share basis. Let's get started by defining NAV and M-NAV in plain English. We gotta lay the groundwork with core definitions and formulas so everyone is speaking the same language. First is the Bitcoin net asset value. We're gonna take the number of Bitcoin a company holds, multiply it by the current price of Bitcoin, and then divide it by the fully diluted share count. The result is an underlying Bitcoin value attached to a single share, also known as BPS, Bitcoin per share. So as an example, if a company has 4,000 Bitcoin and the Bitcoin price is 112,000 and they have 48 million shares, that would mean each share would carry $9.30 of embedded Bitcoin value. Second is our M-NAV. We adjust for a company's balance sheet leverage. So we take the enterprise value, which is the market cap, plus the debt minus the cash, and then we divide that by the net asset value of the Bitcoin. So M-NAV is the simple ratio that tells us how each equity share is priced versus the Bitcoin that it represents. If M-NAV equals 1, that means the market pricing matches the underlying BTC value. If the M-NAV is less than 1, that means the share price reflects less than the value of the Bitcoin. And if the M-NAV is greater than 1, that means the share price reflects more than the BTC value. So notice the two guardrails built into these formulas. We isolate the Bitcoin Treasury, so any operating business value is intentionally set aside to keep comparisons apples to apples. And we always use the fully diluted share count, actual shares plus any in-the-money warrants, options, or convertibles, so dilution is captured up front. So with those definitions locked in, the next slides will plug in live numbers for Sequans and Empory Digital Mobility so you can see exactly how the math works in practice. But before we do that, let's talk about why the gap between share price and the underlying Bitcoin value can stick around or even widen for longer than you'd expect. 5 forces matter the most. Number 1 is float mechanics. Tools like at-the-market offerings or ATM, convertibles, and warrants, they can expand the share count on very short notice. So when potential supply is fuzzy, investors often price in a cushion until they see the final numbers. Number 2 is liquidity and index inclusion. Smaller caps trade on thinner order books. If a name isn't on major indices, it misses out on passive fund demand. With fewer natural buyers, even modest sell programs can keep the price below its Bitcoin value. Number 3 is information lag, and that's because everybody knows Bitcoin reprices every second, but SEC filings arrive on a different clock. Between reports, investors can only estimate how many coins are on a balance sheet or how many warrants are now in the money, so they build in a margin for uncertainty. And then number 4 is one we're all familiar with right now, some macro sentiment. Risk on and risk off waves hit small equities harder than Bitcoin itself. In a broad sell-off, even companies loaded with BTC can trade at steeper gaps simply because fund managers are downsizing anything that looks like a small cap position. position. And then we do have behavioral anchors. Headlines, price round numbers, and recent highs or lows shape short-term expectations. When a story cools or the tape feels heavy, investors may default to easy heuristics, like sell the rally instead of recalculating the net asset value in real time. So the key takeaway is that these forces are structural, not mysterious. They help explain why a company might show an M-NAV of 0.86 or 0.9, even though they both hold verifiable stacks of Bitcoin. So here's the template that you can drop every company into before we even think about interpretation. The goal is consistency, so every line item uses the same ruler. Step 1, you gotta gather the inputs, and thankfully a lot of these Bitcoin treasury companies have these readily accessible on their dashboards. You need 6 numbers only. You need the Bitcoin held straight from a latest filing, the treasury dashboard, or an on-chain address. You need the spot Bitcoin price at the measurement timestamp, the fully diluted share counts, the cash on hand, the debt outstanding, and current market capitalization. And then step 2, you're just gonna run the numbers, and we're gonna see what we get. So with this, there is no subjective tweaking here, no operating business estimates, no future growth assumptions. We're letting the ledger do the talking. So let's put the framework to use using fresh numbers from Sequans captured on September 22nd, 2025. Bitcoin holdings 3,205 BTC on the balance sheet, acquired at an average cost of about $116,000 per coin. The spot price right now is $112,000. We're in a bit of a dip. And then the Bitcoin net asset value, multiply those two figures and you get $359.4 million of underlying Bitcoin value. And using the fully diluted share count of 30.1 million fully diluted shares, that means the Bitcoin net asset value per share works out to $11.94. So the equity is trading at $9.99 as of right now, which gives us a fully diluted market cap of $300 million. So with our M-NAV reading, we're dividing the enterprise value by the total coin NAV, and that yields an M-NAV of 0.86. Now, in plain English, the market is currently valuing each dollar of Sequan's underlying Bitcoin at 86 cents through the equity lens. So what that means is that investors can buy $1 of Bitcoin exposure for 86 cents. So now we're going to run the identical calculation for EMPD. The data is again frozen from September 22nd, 2025. They're reporting 4,081.62 BTC on the balance sheet, accumulated at an average cost of $117,500 per BTC. The spot price, $112,000. That means their Bitcoin net asset value is $458 million. They have almost 48 million fully diluted shares, which means that we get a Bitcoin net asset value per share of $9.21. So the M-NAV reading, we divide the enterprise value by the $458 million Bitcoin net asset value, and we arrive at an M-NAV of 0.87, meaning each dollar of Bitcoin inside EMPD is currently reflected in the equity at 87 cents. Notice the similarity to Sequans. Both companies hold significant Bitcoin, yet both equities price below the underlying per share BTC value when we apply the same neutral math. So this view sets us up to explore how changes in Bitcoin price or shifts in M-NAV can mechanically influence share performance, which we'll tackle on the next slide. So having the two live ratings of the 0.86 M-NAV for Sequans and the 0.87 M-NAV for EMPD, this will let us illustrate purely mechanically how share price can respond to two independent levers. Number one would be Bitcoin price moves, and number two would be the M-NAV shifting toward one. But remember, the table is showing one illustrative outcome, not a prediction. So there is something called the gap closure effect if the M-NAV moves to a 1. So this row right here is representing a 30% move in the Bitcoin price. So with this row, we are isolating a 30% move in Bitcoin, and then we're going to turn to this row where we talk about a price multiple. So this row isolates what would happen if the equity's price to BTC ratio migrated from its current level to the 1.0 parity. So if the M-NAV drifts to a 1 for Sequans, that would mean a price multiple would be a 1.16. So hypothetically, the combined effect on that NAV gap closure, we would take a 1 plus 30% times 1.16, the price multiple, minus 1, and that would equal a 51% move. Using the same equation for EMPD, that would imply a 49% move in the equity. Again, this is not a forecast, it is just an example of how price and the ratio interplay mechanically. So let's wrap with a pragmatic look at risks, potential triggers, and a repeatable checklist that you can use on any Bitcoin Treasury equity. Number one, the key risks: persistent or widening M-NAV gaps. The ratio can hover below 1 or slip even further during supply overhangs, macro stress, or sentiment headwinds outweighing demand. There can be dilution events, balance sheet changes, warrant exercises, new debt raising enterprise value, or the share count overnight, which can move the M-NAV before the price has a chance to adjust. There's financing costs and fee drag potentially with some of these companies. You could have interest expense, you could have management fees, you could have custody costs, eroding the per share economics over time. Unexpected rule changes or news flow can move prices faster than filings update. Some potential triggers: you could have improved disclosure or index inclusion, which would bring new investor eyes and potential passive flow demand. Corporate actions such as buybacks, warrant tenders, or debt paydowns reduce the enterprise value and can lift your M-NAV. Sustained Bitcoin trends often refocus attention on per share BTC value, either compressing or expanding the gap depending on direction. So if you verify the 6 inputs that we outlined, and if you recalculate the NAV per share and the M-NAV every time the new data drops, you can timestamp everything. Then you can track the share count mechanics via ATMs, warrants, convertibles, or vesting schedules. And then you get to set your predefined guardrails for how you'll respond if the M-NAV diverges materially from 1.0, either up or down. So by sticking to the same 6 numbers and the same formulas, you avoid the narrative drift and see exactly how the market prices each company's Bitcoin stack. You can use that clarity to inform but not predict, and revisit the math whenever the inputs change. Thank you for following along. My name is Adam Livingston. I am the Bitcoin Wizard. If you enjoyed this content, please like this video and subscribe to Swan Bitcoin for more daily incredible Bitcoin content. Have a terrific day. Class dismissed.